Welcome to another video. Today we will be speaking about how you're supposed to be approaching the market from a multi-time frame and order flow perspective. So we will be taking a pair, making a multi-time frame analysis on it, checking the order flow, and I will keep the analysis very educational so that you guys can understand what you're supposed to be looking at in the market when you are searching for opportunities. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms each and every day. So I suggest that you subscribe and most importantly that you watch the video until the end because it will be filled with value. Okay, so in today's video, we will be making a multi-time frame analysis on NZD JPY. Now, the reason for which I want to speak about this pair specifically is because it's very educational from an analysis perspective to be looking at this pair, as you will learn in analysis. So I really suggest that you watch the video until the end because you will be learning how to approach this kind of situations. So let's start from a weekly perspective, and obviously we'll be speaking about technical analysis. Then we will be moving to order flow, so the positions of hedge funds and how to read them by using the COT data. And then we will be obviously looking at how we can actually capitalize on the next possible move on this pair. So let's start from the weekly time frame. What kind of situation we have on the weekly time frame of NZD JPY? So clearly we have a market that has created a very strong impulse to the downside. From this high, the market created this very strong movement to the downside, creating a lower low. So the market had a low here and the market created a lower low, creating this very strong impulse to the downside. It broke below all structure levels. We had previous and we have previous support here, which is now turned resistance at this area. So we have a zone of previous support to resistance from a weekly perspective, and the market has created an impulse and a correction that is starting to approach this area of previous support, now turned resistance. Now, as we spoke about many times, if you want informations on this retracement, how are you supposed to be measuring this retracement? You're supposed to be taking your Fibonacci from the high to the low of the impulse. And what you can notice is that currently the market is in between the 50% and the 0.618 Fibonacci retracement levels. And the 0.618 is the golden ratio, the level to which you expect definitely to see the market go. So on the weekly, we have a 0.618 Fibonacci retracement, so the golden ratio lining up perfectly with the structure. So the previous support, now to resistance, creating a confluence of resistance exactly at this zone. So to identify this area that the market might definitely want to test, specifically the 0.618, let's place a horizontal ray exactly at the 0.618. You will understand later on during the analysis why it's so important to identify this zone. So we don't even need the rectangle anymore. We can keep the charts as clean as possible. From the weekly, from our analysis on the weekly time frame, we identified that we have the impulse, we have the correction, and we expect the continuation to the downside. And we identified that we have previous support at this level, which is term resistance, with a 0.618 lining up exactly inside of this confluence zone, exactly where this horizontal ray is. And we know that the market might want to go and test this level before making the move to the downside that we want to see. So I just wrapped up what are the important things that we have to take from the weekly time frame of this pair. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to analyze or explain in the next videos. We go down on the daily. On the daily time frame, what kind of situation we have? On the daily time frame, we have a market that has been ranging inside of this resistance and this support. So we have support at this level and resistance at this level, and the market has been ranging inside of this area until the market will break either above or below this area, the market is trapped inside of this support and resistance. Now, there's one very important thing that you have to keep in mind. This resistance is very near to this resistance. This is the resistance from the daily, is the upper band of the range. And this resistance here, this is the 61.8 that we identified on the weekly, which is in confluence with the weekly resistance. And why it's so important to realize that these two levels are very close, I will show you that in a second. But first, let's go and see what we have from a COT perspective. So commitment of traders, what hedge funds are doing at the moment in the market. Let's start from the JPY. What kind of situation we have at the moment from a JPY perspective? Now on the JPY, we can clearly see that with the last report, hedge funds have closed a lot of long positions. We have seen a lot of profit taking on the longs that hedge funds have, because they have been adding a lot of longs in the last months. In fact, all JPY pairs have been making moves to the downside because obviously JPY was getting stronger because of the JPY longs. So for example, Euro JPY made a beautiful trend to the downside, CHF JPY, all JPY pairs making move to the downside, and now we are starting to see some profit taking on those longs. But keep in mind that shorts have not been added. Hedge funds are not adding shorts, they're actually closing even more shorts. So what does it mean? It means that we can expect more JPY strength in the long term. Even if in the short term we can see some JPY weakness, so JPY pairs making moves to the upside, in the long term we still want to see JPY pairs continue lower and for example, continuation NZD JPY to happen. And if we look at the net positions, we went from minus 56k all the way up to 27k. So from having more shorts than longs, we had 110k shorts and 53k longs. So from having shorts outweighing longs to having longs outweighing shorts. In fact, at the moment we have 52k longs and 24k shorts. So this is just some profit taking on those longs, and we can expect more continuation. And from an NZD perspective, the situation is not very interesting. We just need to realize that at the moment we still have shorts outweighing longs on the NZD, and trends like to continue specifically on NZD pairs. So back to the chart. Why was it important to spot that this area is very near to this one? Because in this type of situations, many times we will see the market create a fake breakout of the range. Now, trying at the moment to predict a fake breakout makes absolutely no sense. Trading is reactive, is not predictive. I can tell you, look, the market will now go exactly here, make a fake breakout, move that back down, and the market will melt. It has good probabilities of happening, but trying to predict the market makes no sense. The market can easily just continue to the upside. Your job as a trader is to react to what the market will show you according to the rules of your rule-based strategies. You can't predict the market, but what you can do is control your account, control your trading, and have a rule-based strategy. So how things can actually play out here on NZD JPY. Now, what happens most of the times, there is no 100% in the market. What happens most of the times in this kind of situations is that the market will make a break to the upside. If the market will actually manage to make a break to the upside of the upper band of this range, what will happen is that most people will start longing NZD JPY because they see the break of the range and you say, okay, this resistance is now support, the market is breaking to the upside, let's long. But they are ignoring that from a weekly perspective, we actually have resistance exactly here. And that would be perfect for hedge funds. Why? Because they can use the liquidity of all people that are buying to actually sell. So it would be a perfect trap because everybody would start buying the break of this range, and they can use their orders to actually sell. So the market breaks above, everybody starts to buy, they start to sell, and what happens next? The market breaks back below this range. That is what we will be waiting for with students. We don't know if this will happen, but if this will happen, we will be ready because this is one of our strategies. So if the market will break to the upside from a daily perspective and then break back down the range, then what we will be doing, we will be monitoring price action from a 4-hour perspective inside of this area on the retest of the range. And as soon as the market will provide to us one of our valid entries from a 4-hour perspective, we will be taking a beautiful short to the downside with very good probabilities and very good risk to reward, at least 1 to 3 for the move to the downside, and possibly for the market to break even lower below this lower band of the range for the continuation to the downside that we want to see from a weekly perspective. So as usual, being reactive and not predictive. If the market will show this fake breakout, which it has good probabilities of showing, then we will definitely be ready to ride this trade to the downside. So I just wanted to make this video to explain this concept when it comes to spotting when the market can possibly create a fake breakout to use the orders of people that don't have a rule-based strategy and are just they're kind of gambling, they're not really trading, to actually give their money to hedge funds that they can fill in their orders and make the real moves happen. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis on all these platforms, as well as going and checking out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit. So I suggest that you click the link and you go and check it out, or you can go and check out the next video.